For more on Meta, let's bring in Mark Mahaney from Evercore ISI. Mark, I mentioned it earlier, Julia Boorstin is talking with the CFO of Meta, and might pop her on while you're still here to get some more insight in your take. But I was struck by the increase in usage across the family of products here. It looked a bit stronger than I expected. You?
A little bit stronger. Just remember that this comp that you're going against the Ukraine quarter a year ago, so it may have had a little bit of an edge, i.e. the numbers last year may have been a little bit depressed, but the user numbers were good. But we're really just going to pop out to every single person, every investor out there, is that revenue growth acceleration. So the ad revenue growth, if you adjust for currency, it was like 13% in the quarter. Google was at 5%. And then next quarter, they're guiding for that ad revenue growth to be north of 20% at the high end of the guidance range. And I think the market was thinking maybe they'd get to 20% by the December quarter, but they're like a quarter faster than the market thought. That's really the big surprise. There's some negatives here, John. I know Barbara was mentioning earlier she'd love to see them tamp down that metaverse spending. That's not happening. They're telling you that they're going to increase materially their metaverse operating losses. I think that's what took the stock down a little bit, or dragged it down a little bit in the aftermarket. But outside of that, this looks like a really good, clean, beat and raise quarter. There
were people a little more than a year ago saying that Facebook was a dead platform, forget about Facebook, blah, blah, blah. And now what, right? You've been pretty bullish on it all along. What do they have to do now, even in terms of messaging or, cost control? You're not excited about that metaverse spending to get things accelerating.
Well, I think you're going through that. I guess the answer to your question, John, I think it's product cycles. And that's what they did. So they had to rebuild their ad tech stack after Apple gutted it for performance marketers online. Facebook's doing that. They have to better monetize Reels. They're doing that. They've got this click-to-messaging ad opportunity. I think is really unique to Meta. And I think they're starting to really ramp that up. There's nothing in the press release about that, so we'll listen on the call. And then they got this Threads, which seems to be growing. I know it's never up and to the right, perfectly, but it certainly seems to be growing while the kind of most obvious competitor seems to be imploding. So it's all of a sudden we've got like these multiple product cycles for a company that against an ad market that's still not really inflecting back up. So it's really all this company specific outperformance on product cycles. When you layer in a truly recovering ad market, I mean, these growth rates are going to be a lot higher than people thought 6 months ago and certainly 12 months ago.
Yeah, you just touched on it, but it sounds like a lot of this is Meta specific versus kind of the actual meaningful recovery taking root, at least not yet for digital advertising, Mark. I'm just curious, can we just say all the Apple iOS privacy changes that were so painful to this company over the last couple of years, are those in the rearview mirror now too?
I think they are, Morgan, but I think it's because this company devoted more resources, more money to figuring it out. I'll give Meta credit on something. They were out front saying this is going to hit us by $10 billion last year, $10 billion. And they were right. And other companies like Snap sort of said there wouldn't be any impact, and they were massively impacted. So somebody got the call right. They had to scramble. They scrambled hard. It really hurt their business. But I think they're coming out the other side now. And yeah, Morgan, I think this is Meta specific. I don't think there's internet advertising. It's not inflecting back up like this. This is Meta specific.